Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Monday, August 29th. Today knocks out another day of August, so we only have 2 days left before we get to September. Just a reminder too that that this week, it's kind of a quiet week. There's a lot of market participants who are off this week, possibly vacationing a little bit next week too. So just keep that in mind if you are trading this week. That volume should be a little bit lower, and some of those big institutional players might be just taking this time off a little bit. So keep that in mind. So yes, quieter day, but so theme of the day that I have here is quieter day, but nothing really has changed too much from Friday. We'll go into some of the charts and kind of look at where there was some strength for the day and also where there was some weakness on the day. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. You could read the full risk disclaimer here, but everything that we're talking about is for education purposes only, not giving out any advice or recommendations. Let's start with the old S&P chart, right? So what do we have for today? Well, we price basically stopped at that line that's kind of curving in here. That's the 50-day moving average. So we're kind of back testing that. I think the S&P at this point for the month, I just checked, right at the end of the day, the S&P is now down about 1.8% for the month. So we've given, back those early gains, and that kind of moved pretty quickly, right? Especially with that big move on Friday. So I would say, small positives for the day. We didn't see that heavy selling pressure. But like I said, I just because there wasn't heavy selling pressure doesn't mean that the technical picture is good. And it could just be that there's just not a lot of people that are trading to start the week. And so that's what we have. We're at the 50-day moving average. I think that people will be watching that. Also, again, it's just the beginning of the week. So anytime I look at a weekly bar on Monday, we've got the whole week to go, but we did close below the value area on Friday. So we've been hanging inside there for 1, 2, 3, 4, 5 weeks, or for 4 weeks, and then we broke it on Friday. So 4071 is really the level that I would like to see us reclaim. I would also like us to reclaim the short-term moving averages. Note that the price action is below there. So short-term trend, long-term trend is basically down, and we are hanging on to this 50-day moving average. Really not a lot of confirmation, not a lot to go on there. The picture's a little bit worse when you look at not so much on the weekly chart, because this is actually just barely still inside the value area. If you want to look at the Qs instead of NASDAQ futures, I know some traders like to look at that. But you can see that we just don't have a lot here either, except there's some support at 297.74 on the weekly chart. And we're also down into that 50-day moving average. Again, it just doesn't look like a great picture here, with all the short-term moving averages sloping down, price below them. So here's kind of, I guess you could kind of, it's almost like the Alamo, right? We'll see if this value area holds for the next 2 days. But if it even does hold 301, we're gonna be starting a new month in a couple days, and this value area is still developing, right, with the last couple of days of the month, but we're probably going to open up below the value area, right, unless something really changes in the last 2 days, and that's kind of a negative to look forward there. IWM is doing a little bit better, right? You've got a little bit more room before you hit the 50-day moving average, and we might be able to open up the month inside value, which would be a small victory. But all in all, it's kind of the same thing. You got the 5-day now crossing below the 20-day moving average. These are sell signals, so I would be very wary about that. I try to practice what I preach as much as possible. And for me, it's to try to sit with light exposure right now, right? Given a couple of things that I've already mentioned, right? Again, nice to see that we're still holding the 50-day moving average, but on the short term, I see more sell signals than buy signals, right? Well, let's talk about the commodities, because that's really the story right now. Is that crude first move back above the 200-day moving average, challenging this 50-day moving average as well, but first time back inside the value area firmly and above the 200-day moving average since the beginning of the month, right? And that's where we started. So, this has been struggling a bit with this 94 level. So back above, and I would say also we're above value now on the 1 hour chart. We've got some levels that we could take out here in the near term, which is 98.28, 98.98, which is, I think, where we could be getting possibly in crude. And it's funny the way that these two kind of move somewhat, well, I don't want to say somewhat opposite, but they seemed, nat gas has been super strong, but today it was kind of weak where crude was strong. All right, so a couple of things there. Another one that I'm watching too is wheat. We saw some small call buying in this. Look at the volume today in wheat, right? So it's challenging this this value area. So watch 843.50. There is a ETF in this space, right? Keep in mind that it's got a lot of slippage, right? Like USO does, because it tracks the futures of the commodity, right? So whenever you're dealing with a futures product, and how they trade these futures, or how they hold a basket of futures in the ETF, right? There's that roll cost from the front month. So keep in mind, it's not the same thing as holding the commodity, right? It will drastically underperform normally, right? But still 866 is the level to watch there. Note also the volume. So again, the agriculture ETFs, the agriculture commodities and just overall commodities in general look a bit stronger than what's going on right now in the market. So keep that in mind. Even though I think some of the energy stocks didn't didn't close on the highs because the overall market was a bit weak, there's still strength here, right? Oxy, I would watch this name tomorrow. Again, same thing. It didn't close on the highs, but you've got 78.82 and 81.93, two VPOCs right up there. Note that it did not close outside of value. So I would watch basically 76 tomorrow for Oxy, right? And then the one that I traded today was CCJ. They were talking about nuclear and power issues over the weekend. And when that, when you hear about that, usually the CCG gets going. So this was up 9.3%. That was my trade of the day. I got into this, again, sometimes I don't like to establish big trades in especially the first 15 minutes of the day, certainly not the first 5 minutes. So unfortunately, it was not that big of a position, but I did add some back. I was able to hit a target up at 29, and it was consolidating, so I just added it right back, thinking that there might be some more upside. I do think that this will go up to 30.15 is my my price target for this, and then once it gets there, I'll probably sit with a smaller position. Bungie was a name that we talked about today. This was actually brought up by a Tribeca Trade Group member, broke out of value a little bit. I did force a target in this. Everything right now I'm forcing targets in because it's just too difficult right now with this market, with it trending lower like it is. Schlumberger, which saw some small calls in there too, again, was able to take a couple targets in this, just being very quick with taking some things off. All right. And then, of course, I think a lot of people are starting to look at what the pot stocks are doing. Hey, it's kind of interesting to have something kind of, after a huge decline, start to kind of, come base and start to rise back up. Where I think this can ultimately get to in the short term is maybe 1404. If it has some more momentum after that, maybe 1478. I'm not looking for anything else in that. And again, I just put a trade on to basically play a little bit. I also have On the short side, I'm synthetically short the ARK ETF via SARK, which is the opposite, but we might as well look at what the ARK ETF looks like, right? So again, it kind of rallied back here this morning in the morning, but was not able to close above 42.90, right? If it does, right, if it does close back above there, I'll probably get out of this trade. But for now, I think it makes sense to have some protection on based on what the indices are doing, or, there's various different things that you could do, right? If you don't like playing things to the short side, you could just reduce your cash and, sorry, reduce your positions and go into cash, or, something like this, you could have a hedge on versus, versus some of your longs and be long. You could operate a little bit like a long short fund. So that's how I've chose right now to position in this market without a lot of positions on, to be very lighter, especially into end of month. You might see some type of program type selling as well going into end of month. Remember, end of months, very generally speaking, right? End of months can be a little bit weaker, and then once we get to the beginning of a month, right, sometimes there's new money being put to work. So the beginning of the month is a bit stronger. All right. And that's about it for today. I'm going to keep today's video kind of short. I went through just to kind of, besides the indices, just to look at some of the the bigger tech names right now. I'll tell you, they do not look particularly good, right? Google is down 80 basis points, so it hasn't fully broken the range, but I think this is one of the weakest looking right now. Watch 107.89, and then this thing might actually break. But for now, it's still in the range, but they're just not looking good. I gave an example, like Meta is another one that might be looking to take that next leg lower at this point. So I would be very mindful about how some of the bigger tech and consumer discretionary names look right now. They don't look very good to me, right? I was talking about this too because I try to take as many questions as possible. Apple's down to the 200-day moving average, but I often get questions about, hey, what does this chart look like to you? What does this chart look like to you? And I'll tell you, if you're looking at a chart setup, and you should know within about 3 or 4 seconds whether or not it looks like a good setup to you. It should really speak to you and say, hey, wow, this looks really good. It looks like a real nice setup. If you have to kind of really look at it for more time than that, and you're kind of saying, well, I don't know, it's not such a good setup to you, right? So again, it should come very quick, right? You shouldn't have to do a lot of analysis when you're looking at some of these things. That's important right now, I think, with the indices trending down and so forth. I wouldn't look too hard, right? I would be right now, I'm in patience mode and, looking for some quicker trades, day trades, and not really, looking to go after things that may be in trouble, right? That you really have to squint and be like, well, maybe it looks okay here, right? That's not what we want right now, especially with the Fed doing what it's doing, right? I don't want to discount the message that they gave on Friday, which was basically they really want to fight inflation, right? We talked about too. I sent just to kind of summarize really quickly, and then we'll end today's video for today. But I sent out a note this weekend talking about what changed, right? For me, it's always about the pricing, right? They could talk as all that they want to, right? But if it comes up in the pricing, such as the Fed fund futures, right? What really changed was the back end of the curve, right? The pricing over here changed quite a bit, and this line, which was sloping down, is now closer to flat. So we'll have to watch for that to change. But for now, the market did respond to what Powell said and adjusted some of the further out Fed meeting pricings and kind of instituted a more hawkish view for that. So basically, patience is necessary here, guys. Again, the other thing that's paramount for me is just realizing that we're in a weak seasonal period, which is when we get to September. But after that, things could get a lot more constructive. But again, you kind of have to let the trades come to you, right? Rather than just say, hey, I'm going to start doing this or this, right? The trades and the setup should be jumping off the page to you. So not yet. Be prepared, do the research, which we do every day. But if it's not there, it's not there, right? Again, you can kind of think of it like a poker hand, right? You want to wait until you get dealt some really good cards, right? I don't think we have that right now. All right. So patience is key. Guys, have a great night. See you tomorrow.